Hello and welcome back to another version of our weekly Forex analysis. Now, as usual in today's episode, we are going to be looking at Euro USD and gold. Now, we are going to be starting off with the GBP USD, and we need to go to the daily time frame to see what the overall direction of the market is. Now, as you can see, we have been discussing about this pair for quite some time now, and we said that GBP USD broke this major structural low here, all right, to change direction from being bullish to bearish, all right. And then we said it took out inducement here to confirm this low, and price started now going higher. Remember, I told you that this is your trading range, this is your range high, and this is your range low. And I said within your trading range, you have only 2 points of interest that work, all right? Now, the number 1 point of interest is your DOB after taking out inducement, and we identified this one as our DOB, all right? We have discussed extensively about that. If you haven't watched our previous episodes of our weekly Forex analysis, you can go watch it, all right? So that's our DOB, and this is your extreme OB, all right? Now, I said that your DOB is a low probability zone, but your EOB, your extreme OB, is your high probability zone. And I said price was free to travel back up to this extreme OB to react off of it before falling, all right, before price will fall, okay? Now, with that being said, as you can see, in the course of the week, price started moving higher, all right, towards the extreme OB, all right. This DOB was a low probability DOB, I mean a point of interest, and so price did not respect it, even though price moved down a while, all right, but later went up to nullify this DOB, all right. So now our target is for price to get to this extreme OB, and then before we see any drop, okay. Now, but as you know, price doesn't go in a straight line like I said before. Price has to go in a zigzag pattern like this, okay. Price moves this way, takes out inducement, taps on any point of interest, and continue to go higher, all right. Takes out inducement, taps on any point of interest, and goes higher until it gets to this extreme OB or point of interest before we see any drop, all right. That was what we discussed in our previous episodes of our weekly Forex analysis. But now, as it is, where is market now? On the daily time frame, we can see now this high and this low is protected, all right. All this is they are internal bars, all right. They are inside bars, and then price has created a new high, and for this new high to be confirmed, it has to take out inducement, and that's why we mark the inducement here. Now, if it happens on the daily time frame that price comes back down to take out this inducement, all right. Now, 2 scenarios can happen. If it takes it out and gives us any confirmation, any lower time frame confirmation, like TNCP, all right, we'll be more than happy to take price from here higher to this point, all right. But if it closes below this inducement, this daily inducement, now this is where we will look at, all right, on the daily time frame, the point of interest we can look at, all right, that price will come to tap into it before we see any upward move, all right, to this extreme OB, all right. That's your DOB here, your daily DOB, and if that fails, then we'll be looking at this extreme OB here, all right, where price can react off from. This is the picture on the daily time frame, all right. So if we quickly go to the 1 hour time frame and see what price is doing on the 1 hour time frame. Now, this is the 1 hour time frame of GBP USD. So let's see what is going on here. Now, as you can see on the 1 hour time frame of GBP USD. Now take a look. Price as let's look at the structure of the market here. As you can see, price has taken out this structure high here. Okay, it's taking out this structure high here. All right, and price close above it. Okay. All right, so this is our valid high. Why? It took out inducement here. And where is your inducement in the market? This is your inducement here, guys. So it took out this inducement here, all right, to confirm this high. As you can see, it took it out to confirm that high. And after taking it out to confirm that high, price now created this low. This low is valid. Where is the lowest low? I think this is the lowest low. This low is valid because it went up. It sponsored the move up that took out this major structure high here, which becomes your break of structure. And so this is your high, this is your low. Let me just indicate that quickly on the H1 time frame. That's your high, and this is your low here, guys. All right. So now, after the high and low has been confirmed, now price went up, created this high. For this high to be confirmed as a valid high, now it took out to this one. Remember, this is equal highs. All right. So this can be your inducement. But if you take this as your inducement, all right, if you take this as your inducement, nevertheless, it will still come back to this. So actually, because it's the same high, it's equal high, so you can use this as your inducement because it created this new high here after this equal high. All right, it created this high here. And for that high to be confirmed, inducement has to be taken. And as you can see, this is the inducement in the market that has been taken. This is your inducement to confirm this high. All right, so this is your new higher high in the market. So this is your new higher high in the market. All right, now price came down, all right, to take out this inducement and from this low. For this low to be confirmed as a valid low, it has to take out this structure high here with a candle closure. Okay, but as you can see, it didn't take it out with a candle closure. All right, this is not a proper break of structure as far as we are concerned. This is liquidity sweep, and as you can see, price swept that liquidity. So this low cannot be confirmed as our valid low until this high is taken out with a candle closure. And as you can see, it eventually took it out. Look at it with a candle closure. Can you see that? It took it out with a candle closure, confirming this one as a valid break of structure. So this low now is confirmed. Now remember, this low coincides with the daily time frame inducement. All right, it coincides with the daily time frame inducement. There is a secret behind your swing low or high on your lower time frame, especially when it coincides with a higher time frame inducement. All right, and I'm going to do a video on that one of these days. Okay, but I want you to understand that it coincides with the daily time frame IDM. All right, and so price now took broke structure here and then went up. All right, now if price comes back down here to take out this inducement, all right, this daily time frame inducement, and this one are low. Listen, if it now comes, if price comes back down to close below this very 1 hour, it does not mean that price has changed direction. I want us to know that very, very well. All right, because this is daily time frame inducement, and so therefore price continues to go higher and prints this high. Now for this high to be confirmed as a valid high, all right, it has to take out inducement. And where is the inducement here? Well, if price now does something like this, take a look. If price does something like this from this high, if price now moves down, as it has created a new low now and goes back up before coming down, all right, now this will become your inducement here. This one will become your inducement. But as long as price is still continuing with this structure here, this becomes your inducement. Okay, so this is your inducement. If price now comes down to take out this inducement and gives us any form of lower time frame confirmation like TNCP, we'll be more than happy to take price higher. But if it doesn't, now if it closes below that inducement, that 1 hour inducement, then this will become our DOB, our 1 hour DOB. I want you to understand that this will be our 1 hour DOB where we will look to take trades from. All right, so now that is the 1 hour DOB. Now after this DOB, where is your extreme OB? Is there any extreme OB here? Everything is mitigated here, guys. All right, as you can see, everything is mitigated unless we want to use this. Now this can be used as your extreme OB. All right, because everything is mitigated here. All right, so this can be your extreme OB. So these are the only two OBs we look to take trades from on the 1 hour time frame of the GBP USD. These are the two possible scenarios. But remember, price can change the structure as it is now. If we have a structure that does something like that, like this, like I told you, price coming down, all right, to create inducement before price start going back higher. All right, this now will become your inducement here. This one will become your inducement, like I said before, and then we begin to look for new structure, high and low. I hope you understand what we are saying. Okay, so that is the picture of GBP USD, both on the daily time frame and on the 1 hour time frame. Now let's quickly go to Euro USD and see what Euro USD is doing. Now this is Euro USD. First of all, we go to the daily time frame to see what the daily time frame is actually doing. So this is the daily time frame of Euro USD. It's just the same thing as the GBP USD, almost the same thing, guys. Now remember, in our last episode, I told you that this was your DOB. All right, many guys made the mistake of marking here after this inducement. They thought that this is their DOB. This is not your DOB, guys. All right, where is it? This is not your DOB. Why? Because this candle low and high are protected. All right, so this is your actual DOB, and as you can see, price tapped into that DOB and reacted. All right, but now remember, your DOB is a low probability zone. Your high probability zone is your extreme OB. All right, that is your EOB. It's your high probability zone, this zone here. All right, I want you to understand that. So when price tapped on this DOB on the daily time frame, it reacted. Now maybe we could have gotten a trade on the lower time frame as it tapped into this DOB. But first of all, if you look at this DOB, if you go down the lower time frame like the 1 hour to try to see whether you can refine this DOB, all right, so that we can see the precise point where price is likely to react from on the DOB. Let's see whether we can do any refinement here, because this is very important for us to understand. Okay, very, very important for us to understand. Now, let's see. Okay, so this is that DOB. All right, remember that daily DOB. So we want to see, is there any refinement here that we can do? Okay, so here price is already mitigated everything here, and now the only point of interest we can look at here is these 2 points of interest. All right, that's for me. I will first of all look at this as my point of interest. I'm talking about refining this your daily time frame DOB. All right, here price took out this high. This week can become your point of interest. All right, because you need a proper imbalance. So that can become your first point of interest, and the second one will be this one here that I will be looking at. All right, but this one is already mitigated by this one. Okay, so this is the only refinement OB within the DOB daily time frame DOB zone. Okay, so if price now, if in future comes to this point, then we'll be more than happy to take trade lower if it gives us a lower time frame confirmation. Okay, so we need to understand that one very well. But as you can see, I don't know what price is doing here. Let's see. Let's drag it out first and see what is happening here. Okay, so this is your refinement. All right, so but nevertheless, this is your refinement of the daily DOB. Okay, now what price has tapped into this daily DOB? This is our entire daily DOB. All right, and as you can see, it's too large. All right, but when it tapped into our daily DOB, what happened? Look at it. Look at what happened here. We want to follow our trading plan to the latter. Now price tapped into this daily time frame DOB. All right, and then this becomes your chop. This is the first pullback after price tapped into this DOB. This is your first pullback. All right, correct. Now after your chalk, what do you expect to see? After chalk, you want to see your inducement. Now as you can see, this is the last low, and inducement is here on the 1 hour time frame, that is. Okay, so this becomes your inducement in the market, and after inducement you want to take trade. All right, this is your inducement on the 1H time frame. Please remember that. So that's your 1H inducement to confirm this low as a valid low. All right, and now remember, this is internal structure. This internal structure. Now it took it out, and when it took it out, all right, what happened? Where is your point of interest here? Well, after inducement, where is your DOB? All right, the first point of interest is your DOB. All right, after inducement, everything is mitigated here, as you can see. Now, the only one that is available here now is this one. Now, take a look at this candle. All right, this candle took out this previous candle's high. All right, but this is your actual OB. If you want to take this OB, this third candle is already mitigated because this one is an inside bar. All right, so you can transfer this your OB to this next one here. All right. And therefore, if we transfer it to this next one here, in order to have a fair value gap, because that's critical, you have to have a fair value gap. Now, if we transfer it to that one and stretch it out, all right? If we stretch it out, as you can see, price came into that point of interest and reacted, all right? When it reacted, now, remember, this is a low probability zone. This is your DOB. Your daily DOB is a low probability zone. Price can do anything. Price can fail. This DOB can fail because it's a low probability zone. If it fails, it will go to the extreme OB, the daily extreme OB here. All right, I want you to understand that. So in order for you to have some form of confirmation, you will need to have TNCP, a confirmation, all right, that this point of interest here will hold price, and therefore you need to wait for DOB to take place here. All right, and as you can see, there is no DOB here yet, so we are waiting because it's possible for price to now come down a little bit and then go higher and blow through this daily time frame DOB. I want you to understand that. So you need a confirmation. So that is the picture on the 1 hour time frame. All right. So this is 50-50. It's 50-50 chance because this DOB is low probability. That's so much on Euro USD. So we now quickly go to gold, all right, and see what gold is trying to do. Now this is gold, but first of all, let's get to the daily time frame. Now, daily time frame of gold. Let's see what is going on here. Hello guys, you need to bear with me. My network is just crazily slow. I don't know what is happening. It's seriously slow. So this is gold on the daily time frame. We have discussed on this many times over. All right, now take a look. This is, we said, let me show that to you before we go further. Now remember, this is our low, this is our high, this is our trading range, and price has traveled back down to this extreme OB here and reacted off of it and started going higher. All right, now remember, in our last episode we said this is a high and it printed this low, and price went up again to take out this high. Now, to confirm this high, inducement has to be taken, and this is inducement that has been taken. And we said last week that this is your DOB. Why did we mark this as DOB? All right, we look at this as order flow. Order flow is more important than your OB. All right, so this is your order flow, and I said this order flow serves as DOB, and this is your extreme OB. All right, now this is your daily time frame order flow. But if we go to the 4H time frame, let's get to the 4H time frame and see what is going on there. This is your 4H time frame. Remember, that's your daily time frame DOB. All right, now inside this your daily time frame DOB, if you want to refine, because this DOB on the daily time frame is huge. All right, so we want to refine it, and then if you are refining your order flow from a higher time frame, when you get to your lower time frame, you also want to refine. You want also to identify an order flow. All right, because you are trading with the order flow. All right, now, so now this is a refined version of your order flow, of the daily time frame order flow. So we refine to this one here. As you can see, this is an order flow. All right, now price came and tapped into that order flow. When price tapped into that order flow, this is where you would have taken advantage of this market, guys. All right, I need you to understand how to take trades in the market. This is why I'm doing this weekly forex analysis, because I want you to learn from the narrative that I'm giving on each weekly forex analysis. Now, as you can see, price tapped into this. When price first tapped into this, but it didn't touch on this refined 4H order flow. All right, it went up again and came down and touched on it. When it touched on it, all right, on this 4H refined OB from the daily time frame, I mean order flow from the daily time frame order flow, we refine it to this one, to this 4H order flow here, and price came and tapped into it. When price tapped into it, there are ways you can take this market. All right, now first of all, you need to understand that when price engulfs a candle like this, as you can see, all right, this candle becomes your TNCP. All right, this is your TNCP here, guys. And whenever you mark your TNCP on your higher time frame, when you get to your lower time frame, you also want to identify TNCP, all right, and enter trade from there. Okay, so now this is your TNCP in the market. All right, now after this TNCP, you want to get down to your lower time frame. This is 4H, so you want to get to your 15M to see whether you can find a confirmation entry using the TNCP as well. All right, let's see. The market moves, all right, objectively. Some people say the market moves randomly. The market doesn't move randomly. It moves with a very particular specific objective in mind. I want you to understand that. All you need to do is to follow the footprint of the smart money. Once you follow their footprint, then you will become consistently profitable in the market, because they will always leave their footprint in the market. Now, here is our 4H TNCP, this one. All right, it's our 4H TNCP. Now, we want to refine this TNCP to this one. Now, do we have any TNCP on the 15M? Now, take a look at this. This is another TNCP on the 15M. All right, now this is an engulfing candle. Okay, so you now have this TNCP here that you can take trade from, like here. This is your TNCP here. All right, that's your TNCP, and you want to take your trade from there. All right, you want to take your trade from there. So if you would have taken this trade from here to go long. All right, to go long, and to go long, this is the way to do it. All right, now, because this is TNCP on, you have TNCP on the higher time frame and on the daily, on the lower time frame, so you can give a buffer to your stop loss. And then where is your target? Your target will be the 4H high. Where is the 4H high? Let's see. Let's see the 4H high. Okay, so this will become your 4H high. That's where you will target. All right, now remember this point here, this is where you are going to be targeting. All right, so therefore you can now take your trade from here to that point. All right, but remember, I'm going to tell you how to manage this trade, so you don't just leave it like that to run to this point. All right, don't just leave your trade like that to run. All right, so that will be your trade in the market on the 15 minutes time frame. That is, guys, can you see that? And as you can see, if you look at this hour, let me show that to you so that it doesn't seem as if I'm making up. All right, let me show that to you. I've told you this is your, now take a look at this. This is where you enter the market. This is your OB here. All right, and this is your stop loss. All right, so when price now came back, it tapped into this our point of interest, I mean into our point of interest. All right, and started moving higher, as you can see. Now remember, when price moves and break this structure high here, please, you can move your stop loss to break even. All right, move your stop loss to break even, because anything can happen in the market. And as you can see, price didn't actually come back at all. All right, it went higher. So that is how you would have caught this crazy move here. All right, look at this crazy move. This is how you would have caught this crazy move. And I think price tapped on our TP. All right, if you took it, well, almost, it almost tapped on our TP. All right, it almost tapped on our TP. Can you see that? So that is how to take trade in the market. All right, now that is for that. That is for last week. I'm just showing you how you could have gotten advantage of this trade. Now let's quickly look at the 15M time frame. What can we be looking at? All right, on the 15M time frame. No, let's get to the 1 hour. Let's get to the 1 hour time frame and see what is happening on gold. Now this is the 1 hour high. This is the 1 hour high. All right, is that the 1 hour high? Yes. Now I want you to understand, okay, I want you to understand that when price takes out this high, is it really your 1 hour high or your daily high? Let me see. Let me confirm that, guys. I want to confirm that because, okay, so this is your internal structure high. This is your internal structure high, guys. Your real high is here. All right, so if price breaks this high, this internal structure high here, doesn't mean price has changed direction. This is not known as chalk. This is internal structure. Well, it is internal structure chalk, but your real high is here. So if it breaks and closes above this high, doesn't mean that the structure has changed, all right, on the overall structure of the market. I want you to understand that. So this is your internal structure high. So we go back to that 1 hour so that we can understand what we're doing. So that's your 1 hour high. This one is your 1 hour high. All right, it's not the 4H high or the daily high. It's your 1 hour high. It's your internal structure high. All right, so we are waiting for price to come and take out that high. But meanwhile, as we are waiting for price to come and take out that high, well, price can do some things. Now remember, this is a high here. All right, for this high to be confirmed, it has to take out inducement. And where is your inducement here? This is your inducement in the market, guys. So this is your inducement for price to take out. All right, to confirm this high. And as you can see, price has not taken out the inducement yet. So we are still looking at price. Price is still doing its own thing here. All right, but all we know is that we are waiting for this high to be taken. I mean, this inducement to be taken. Once price takes inducement, this high is confirmed. Remember, it's your internal structure high. It's not, you know, this is your micro high. It's not your actual high. Okay, now if it takes it out and gives us TNCP, we can take price higher. Otherwise, if it closes above it, then we now look for a point of interest where we can take this trade from. All right, and where is that point of interest? Well, as you can see, everything here is mitigated. All right, everything is mitigated here, and therefore, if we look at this, is this one also mitigated? Let's see. I'm talking about on the 1H time frame now. This is your order flow. All right, order flow. This is your order flow in the market. Remember that one. Your order flow is much more higher. It's much more significant than your OB. But after that order flow, take a look. If we refine that order flow to this OB here, you have an OB. After order flow is your OB. You have an OB here. All right. So this is it. And price has come to tap into this OB. All right. So this cannot be your this one is already mitigated. So you have this low here, all right, because this is a high. It took out inducement and created this high. All right, so this high has taken out structure here, and this is your last higher low before this higher high. I want you to understand that this is your last higher low before this higher high. All right, and for this high, it has to be confirmed by taking out inducement, and after inducement, I've told you, it can give us TNCP on the lower time frame. We take trade from there. Otherwise, we wait for price. Where is it? To come and take out. Everything is mitigated here, guys. This one is also mitigated. Everything is mitigated. So once everything is mitigated like that, what do you do? Let's see. Is there any? Let's see. Well, this is the picture of gold. There is nothing here. So all we need is for price to come and take out this inducement and gives us TNCP on the lower time frame, and we can take price higher, or price creates a new structure, all right, like this. Now take a look. Price can create something like this. Price can create a new structure here like this. If price now goes up, all right, it creates a new structure, all right. Take out this inducement and then tap on any OB here, all right, before going higher, all right. That is the way we want to take look at this market here. I want you to understand. So that's the picture of gold, both on the daily time frame and the 1 hour time frame. Okay, that is the picture of gold. So we are waiting to see whether we'll have a new structure created, or whether it will come down to take out this inducement and gives us TNCP on the lower time frame. Then we can go higher, all right, to take out this internal structure high here. Remember that this is your internal structure high. Once it takes out that internal structure high, your real high that you'll be targeting is somewhere where here is somewhere here. Where is the high? Let me show that to you. Okay, so this is your actual high, that you are looking at. All right, so that's the picture of gold, both on the daily time frame and the 1 hour time frame. All right, guys, I see you in our next weekly Forex analysis.